Time for the market report. Prices slipping, but only slightly.
That's right, Mike. Market's on the downturn, but not by much. We'll get into that and more. But first, the numbers. What were the week's biggest gains and losses? And then several USDA reports telling us about row crop-based goods. And finally, we take a look at the peanut markets with Extension Ag economist Will Maples. So, markets closed the week on the downswing, a very slight downswing. Most commodities didn't move much. Let's take a look. The week's biggest gain, lean hogs, up nearly 4.5 cents, an over 5.5% increase from the previous week. The week's biggest loss, live cattle, down nearly 3.25 cents, an over 1.5% decrease from the previous week. Last week, several USDA reports dropped, mostly updating usage of row crop-based goods, namely cotton used for textiles, seed crops used for biofuel, and an update on peanut prices. Suffice to say, there's a bit to get through. Here's Bella Bingham with the details.
Extra long staple cotton consumed was 422,000 pounds in September this year, down 33% from August, but up 63% from September last year. Total number of spindles on the cotton system was 753,000 during September. Active spindles consuming 100% cotton were 427,000, down 10% from last year. Soybeans crushed for crude oil about 5.5 million tons in September, compared with about 5 million tons in August and about 5.25 million tons September last year. Canola seeds crushed for crude oil about 205,000 tons in September, compared with about 199,000 tons in August and 209,000 tons in September last year. Cottonseed once refined oil production at about 25 million pounds September this year, down 24% from August and down 31% from September last year. Total corn consumed for alcohol and other uses was 490 million bushels in September. Total corn consumption down 8% from August, but up 3% from September last year. Corn for fuel alcohol down 8% from August, but up 3% from September last year. Peanut prices received by farmers for all farmer stock peanuts averaged 26.5 cents per pound for the week ending October 26th, down about half a cent from the previous week. Runner-type peanut prices averaged about 24.5 cents per pound for the week ending October 26th, down a little over half a cent from the previous week.
Now that you have some context, what do the experts think? I spoke with MSU Extension row crop economist Will Maples, you met him earlier, to get a bigger picture on what these reports are telling us. We started with cotton.
Yeah, so the cotton systems consumption report is an interesting one because it's basically about how much cotton are we spinning in the yarn domestically. So while we do see cotton spinning is up this year, mainly due because we have lower prices, we have a larger supply of cotton coming in this fall. It makes cotton more affordable to domestic spinning mills. We got to kind of keep in mind, though, that as far as cotton markets are concerned, we spend domestically about 1.5 million bales of cotton in the U.S. domestically. It's a small fraction of the overall cotton use that's mainly dependent on the export market. So any strength we see in the domestic cotton spinning is good. We like to see it. We like to see those higher spinning values, but market-wise, it has a smaller impact on what we see with price movements.
Well, I suppose both of those crushing reports that came after were a bit more eye-opening. So you had the oil seeds crushings, which is mostly soybeans, but there are other oil seeds involved in that. And then you also had the grain crushings, and we focused on corn. So with both of those crushings reports, what is that trying to tell us?
Yeah, so we saw crushings of both commodities up from last year, mainly because we have a lot higher supplies this year, as we've talked about a lot on this show. Corn and soybeans are both cheaper, so we'd expect that to drive more demand for those commodities when it comes to crushing. So it's good to see those higher numbers. It adds some good strength to the domestic market for those commodities. On the corn side, main crushing corn for ethanol. Ethanol is a major component of corn demand, and anytime we can see some strong ethanol numbers, that's good for the market.
Let's move on to peanuts real quick, which is an interesting commodity because they don't really trade that in Chicago. So it can be kind of hard to get peanut prices set. We kind of got to rely on the USDA for these numbers. And that latest peanut report shows that basically peanut prices are trending pretty close to how they were this time last year.
Yeah, so peanuts are interesting compared to other commodities we talk about because a lot of times they're grown on contracts. They don't have a futures contract to trade. Most of those producers, they sign some type of grower contract in the spring based off of what kind of bids they can get from the peanut buyers. So last year we saw some pretty good, strong peanut prices. Kind of got lower stocks right now compared to where we've been the last few years. When you compare peanuts to cotton, peanuts are more profitable per acre than cotton are right now. So we're expecting into next year that's going to drive some more peanut acreage in, which will probably dampen prices a little bit just because we're getting more acres, build up those stocks again. But overall right now, peanuts is one commodity market. We've been kind of doom and gloom on here last little bit about some of these commodities, but peanuts still have a little bit of strength to them.
And that's it for a deeper look into the markets. Prices seem to be looking for something to hang on to while harvest finishes up.